So these are some ways in which you can save your tax. This is called tax planning. But between these two concepts, planning and evasion, there is a secret concept which has been the recent hot topic of discussion. Hello everyone, this is Professor Siddharth Surana, Chartered Accountant, working with Lakshya CA campus in Kerala. Today we are presenting a small video about savings of tax. I will keep my explanation divided in three concepts. Tax can be saved by doing three things. We have the concept called concept number 1, tax planning. Concept number 2 is tax avoidance, and concept number 3 is tax evasion. Legally, there is only one of the three things allowed, that is tax planning. So we will go into more detail about tax planning, but avoidance and evasion we will cut down because it is not legally allowed. So just a brief explanation about the same. Whenever the government has created any tax provision, a legal provision which you can use for the benefit of your tax liability, for reduction of your tax liability, that is going to be called tax planning. The examples for which are: if you have invested money in life insurance, when you pay premium, the premium that you pay is subtracted from your taxable income. So that much will be reduced from your taxable income and the balance amount will be taxable. Apart from that, in the same section, you can also contribute money in your provident fund, which covers recognized provident fund, public provident fund. For government employees, we have something called statutory provident fund. If you have children going to school, up to a maximum of 2 children, you can contribute their school tuition fees. You will get benefit for that also. If you have taken a home loan, if you pay the principal, whenever we pay our EMIs are divided into principal and interest. The principal component will be allowed in the same section. All this is in a section called ATC of income tax. The interest is separately allowed. I'll talk about it after some time in some other section. All these things which I said right now, up to a total of maximum 1,50,000. So your actual contribution or 1,50,000 out of the two, whichever is lower, is going to be allowed as tax benefit. That was a section ATC. If we talk about another section ATD, if you have paid medical insurance premium of yourself or your spouse or your dependent children or your parents, you are going to be eligible for another deduction under ATD. It can be payment of premium, or if your patient is a senior citizen, that is 80 years and above, then you can also pay their hospitalization expenses. You will get deduction in this new section, the other section ATD, which is again restricted to a maximum of 25,000. However, for senior citizens, the limit is enhanced from 25,000 to 50,000. Whenever you are giving donation to any public charitable trust, any religious or charitable trust, if it is a registered trust, there is a section ATG under which there is a calculation prescribed within which you can get your deduction. Recently, to newly introduced tax provisions, there is a section ATEEA and there is a section ATEEB. Let us talk about them one by one. EEA is about deduction for interest on home loan. So the principal was allowed in the first provision, that was ATC, and the interest will be allowed over here. Whenever you are buying your first house, in income tax it is classified as something called self-occupied property. For a loan taken for buying your first house, you get deduction in your chapter house property, but that deduction is restricted to a maximum of 2 lakh rupees. If your interest component for the year exceeds that limit of 2 lakh rupees, then up to a maximum of 1,50,000 you can take deduction in this newly introduced section ATEEA, but it has to be your first house and the value of the house should be a maximum of 45 lakh rupees. But there is a condition here that the loan has to be taken during the financial year 1920. So anybody taking the loan up to 31st March 20 will be eligible. Later on you will not be eligible. This is a maximum of 1,50,000. A very hot topic in our country. The next provision ATEEB. The government is very determined to promote clean fuel, energy savings, and government is discouraging people from going for petrol or diesel vehicles. So now purchase of electric vehicles is going to make you eligible for tax benefit. If you purchase any electric vehicle by taking a loan, the interest that you are paying on the loan taken for electric vehicle, again up to a maximum of 1,50,000, is going to be allowed as a deduction in this newly introduced section ATEEB, interest on loan taken for purchase of electric vehicle. This is the future. In the coming days, as and when more and more charging stations will come up across the length and breadth of our country, then more and more people will be found opting for electric vehicles. We don't know the future, but we assume that this is going to be the future. In another section 80E, if you have taken any loan for higher education, you can take the deduction in 80E, again only of the interest component. Here the principal will not be allowed, and here there is no maximum limit. The only condition is that the higher education should be in India, and you can take it for yourself or your children. You will get a deduction of your interest payment, unlimited amount, but a total of 8 years. So from the year where you start taking your deduction, from that year plus 7 up to a maximum of 8 years. So these are some ways in which you can save your tax. This is called tax planning. This is legally allowed, and there will be no assessing officer in the country who will raise any objection for this, mainly because these sections are specifically created that you take the benefit. If we talk about the other two concepts, let's talk about the easy concept. There is a concept called tax evasion. Evasion means crime. If you have underdeclared your income by unfair means, earning in cash and not showing, booking fake expenses, if you have given any false information, incorrect information, manipulated your books of accounts, that is tax evasion. If you are caught doing that, you will not only pay your tax, you will also be liable for payment of interest, penalty. In extreme cases, you will also be liable for arrest, that is prosecution. So my suggestion, kindly never think about evasion. Planning is always going to be allowed. By legal means you can take whatever you want to, but evasion is something that I strongly discourage. But between these two concepts, planning and evasion, there is a secret concept which has been the recent hot topic of discussion in big seminars everywhere, the concept of tax avoidance. Whenever you are within the four corners of the law, that means you are not committing any contravention of law. You have not given any false information, you have not given any fake information, but you have exploited the loopholes in the law by unfair ways. That is going to be called avoidance. And I will give you an example so that you better understand. Supposingly we have a country, India, where the highest rate of tax is 30%, and there is another country, Dubai, where there is no income tax. If you incorporate two companies, one in India, one in Dubai, and you make sales from your Indian company to your Dubai company purposely at cost or below cost, thus you are showing less profits in your Indian company and more profits in your Dubai company. Your overall profit is not changing. Your overall profit is not changing because both companies belong to you, but you are exploiting the difference in tax rate. This is called tax arbitrage. And here, this is legally allowed. There is no law which prohibits you from incorporating companies in two countries. There is no law which says that you cannot sell your product at cost price to your associated enterprise. There is no such law. You are staying within the four corners of the law, and government is slowly and gradually becoming very, very strict about tax avoidance. Because when a person does tax evasion, at least the person has got fear of the law. If I get caught, I will not only have to pay tax, I will also pay interest, penalty, prosecution, because I have given false information. But in case of avoidance, you are not giving any false information, you are not contravening any law, and consequently people are not afraid. Even if I get caught, maximum it will be tax liability. I will not be paying any interest or penalty, which is why government slowly and gradually is making tax avoidance difficult in our country. Already in our income tax, the example which I gave you, the India-Dubai example, to stop that, we already have a chapter in our taxation law called transfer pricing. Whatever is your actual transaction price, we will ignore, and for tax purposes, we will take the arm's length price. In simple language, you can call it the fair market price also. But there are some transactions to stop which there is no provision in our country, in our taxation law, and thus our government just 2 years ago has introduced a very, very hot topic called GAAR, G-A-A-R, GAAR, that is General Anti-Avoidance Rules. Whenever your assessing officer feels that you have exploited loopholes in the law, you have taken unfair advantage of the law, your assessing officer is now empowered to declare your entire transaction from start to finish as void ab initio, as an impermissible arrangement, and he can invoke that concept called GAAR and disallow you from taking that benefit. So in the longer run, evasion is definitely not advisable. Avoidance is something which I strongly say that right now you can do, but in the coming days government will strongly come to stop you from doing avoidance, and thus it is advisable that whatever sections are specifically created for your tax benefit, which government intends to give you tax benefit, you should stay within those boundaries and take tax benefit, and we call it tax planning. So tax savings can be classified into three categories: tax planning, avoidance and evasion. In the longer run, only planning will be allowed. Avoidance and evasion has to be stopped. Evasion is already stopped, and avoidance slowly and gradually will be weeded out, phased out of our country. That was a small piece of information about tax savings. This is Professor Siddharth Surana from Lakshya CA campus, Kerala. Chartered accountant. I am from Mumbai, but I am working with Lakshya CA campus in Kerala. Thank you very much for watching. I hope you have a nice day.